Is SoFi a tech company? The retail investment community has been having this debate for honestly what feels like years, literally years. There's been a constant back and forth of retail investors arguing whether or not SoFi is or is not or is on their way to becoming a tech company. And in this video, I'm going to put an end to that debate once and for all by sharing what I hope to be one of the more comprehensive and balanced viewpoints on the matter. And yes, some people at the end of this video might watch and might still disagree, and that's totally fine. The goal here is to speak to both sides of this conversation and give it the structure that it deserves so that we can once and for all wrap up this subject and move on to other topics. Let's jump right in. Okay, so first and foremost, I want to preface that I did not watch the debate last night with Amit and Steve and Tanner and Chris. I haven't gotten around to it yet. I am not boycotting it. I will get around to it. I just wanted to make this video where I'm not biased by any of the particular arguments. I wanted to share my thoughts first and then watch to see other people's thoughts. Now, I've shared some of my thoughts on live streams in the past around what makes a tech company. This is from somebody who works in the tech space. And so I kind of have a good grasp around what are some of the core attributes that define a tech company overall. So the points that I came up with is very, very basic. The majority of the revenue comes from tech-enabled segments. The company uses technology to enable a differentiated product offering. So they have some type of competitive advantage from their technology, or they're making money through the use of technology. Now, unlike other creators that might go much deeper into that comprehensive definition, I really don't want to draw nuances around how I determine a tech company versus how somebody else might determine a tech company because, and I want to repeat this very clearly, it does not matter. What matters is ultimately what the collective market thinks, because that is what determines the multiple that the market assigns to the company's valuation. So even if you agree with my points to say this is a comprehensive definition of what a tech company is, or even if you disagree with that argument, the fact is that SoFi will continue to be valued based on how the market views it, not based on how this video might frame it as a tech company or not. And by that definition, I'd argue SoFi qualifies as a tech company because, in my opinion, they generate revenue from their tech segment, Galileo and Technisys, and they use their technology to enable a remote-first digital native bank experience that offers a product suite that most legacy banks can't match. They use tech as a differentiating factor. Yes, I understand the growth of Galileo has lagged. Yes, the tech segment is not the majority segment today. I understand all this, but the underlying infrastructure and the long-term intent is clearly tech-driven. However, despite this, I want to repeat this point because it's important. The market still looks at where SoFi's majority of the revenue comes from and assigns a multiple based on that. Today, the majority of SoFi's revenue comes from the lending segment, which is a banking activity, and the market is assigning them a banking multiple. It's as simple as that. If the tech segment was in fact doing double or triple the revenue that it's doing, and it was a bigger chunk of the pie, the market would be more likely to give them a hybrid valuation. So while we're arguing if SoFi is or is not a tech company, what's important is what does the market really see? And ultimately, the market is not giving SoFi a tech multiple because the revenue does not come from the tech segment. It's a very small portion of that revenue. If 3/4 of the revenue was coming from Galileo, then this would be a tech company and so on and so forth. But I think the more important piece here is why is this even a debate? And I think there's two core reasons why this persists as a debate throughout multiple years. And I'm not joking, it's been years. One is investor expectations, because a lot of retail investors that bought SoFi back in 2021 bought it on the AWS of fintech narrative. And this narrative was centered around Galileo and the tech platform. It was the growth story that was supposed to take SoFi to the next level of their acceleration to differentiate them further from every other legacy player. By and large, fast forward a couple of years, that story has not panned out at the same pace that many had hoped back in 2021. And so the investment thesis has shifted more towards the strength of the lending and the financial services segments and less towards the tech platform, because the tech platform growth rates are the lowest out of all of SoFi's revenue drivers. So that's the first reason why this is still a debate. The second reason is because the stock has, although it's doubled in the past year, many fintech names have seen more explosive growth. Robinhood, for example, has done 4 or 5x in that same time period. And the stock performance versus investor expectations is skewed And many investors feel like they faced opportunity cost while holding SoFi. The tech company debate, in my mind, is really a proxy for why has the stock market not rewarded this stock the way that I thought it would? Why is the market not realizing SoFi's potential? That is what triggers, is this really a tech company? And let's be real. If SoFi were trading for $30 a share today, right now, there would be nobody arguing whether this is or is not a tech company because the stock price would be aligned with what the investors are expecting from their investment. The opportunity cost would be diminished, and as a result, this tech company conversation would magically disappear. Nobody would be talking about it. However, the conversation right now continues to persist because the stock is down or the stock is flat. Now, let's talk about where we go from here. Because at the end of the day, investors fall into one of four different buckets. And this is why I think that this conversation, this debate, is one of the silliest debates that we can have in the market when talking about SoFi. And this is from somebody that's been covering SoFi for years. And there's really four scenarios, and I've broken them out in this decision tree, and it's very, very simple to follow along. So the question is SoFi a tech company? Let's run through the first scenario. Yes, it is a tech company. You personally recognize it to be a tech company. Then the question becomes, does the market recognize it as a tech company? And if it does, then the stock price rises, this debate is all over, and everyone goes home happy because they have capital appreciation, they have money in their pocket, and it's done and dusted. The second scenario is if you personally think it's a tech company, but the market fails to recognize it as a tech company, then the stock will remain undervalued. You will buy more because you think the market is missing out on the potential upside of it being a tech company, because there's a difference in opinion. You think it's a tech company and the market doesn't. And as a result, you will feel like you have an edge by buying. But the frustration will build, and this opportunity cost narrative is something that's creeping in the background because the stock will remain undervalued. Now let's move over to the other side of the decision tree. Is SoFi a tech company? No. You believe it is not a tech company. Then the question becomes, well, are you still investing in SoFi? And if you answer yes, then it's likely you're investing for other reasons. For example, the loan platform business, the lending platform, and all of their other tailwinds that they have at their back. In which case, the tech discussion doesn't really matter. It doesn't matter if it's a tech debate or not, because you're buying it for the loan platform business. You're buying it for the growth rate. You don't really care if it is a tech company or not. It's not a make or break conversation for you on what the growth rate of Galileo as an individual segment is. Finally, the fourth bucket is you believe it is not a tech company, and as a result, you are not investing in SoFi, in which case you've likely already sold your shares or are considering selling and moving on to other investments. And if that's the case, then this whole tech debate is a moot point. It becomes irrelevant because you're not invested, so why should you even care? Ultimately, no matter what side you fall on this debate, the underlying decision tree is the same. Everybody will fall into one of these four buckets. You're either bullish because of the tech, you're bullish in spite of the tech, you're bearish because it isn't tech, or you're bearish for unrelated reasons. Overcomplicating the conversation beyond these four buckets does not move us forward. So where is this heading? There's a couple of outcomes on where this could potentially head. Number one is the tech platform could accelerate. It could become a 50% plus growth rate in 2026 and beyond. And as a result, the market will then go and assign a tech multiple. The stock will rise as a result. You're happy. Number two, the loan platform business continues crushing it, and the stock appreciates regardless of this whole debate. Galileo can stay at 10% growth rate forever. And if the loan platform business is bringing in triple-digit growth rates, it doesn't really matter what multiple the market assigns it. The stock will go up. As a result, the debate is going to end due to price action. The stock is going to appreciate. Number three, the tech platform grows, but the stock does not grow, in which case many bulls might see this as an opportunity to accumulate more, and many skeptics might say opportunity cost is the cost of investing in SoFi. And it's further going to extend the time before the market catches on to SoFi's potential. Finally, number four, neither segment accelerates meaningfully, and the stock stays flat, which causes some investors to exit, realizing that the original AWS of fintech vision didn't materialize. And whichever one of those four scenarios pans out, either way, the market as a collective will eventually decide. SoFi does not need to become Stripe or Square or any of these other companies that are tech companies to succeed. It just needs to execute on what they've been doing well. And in 2025, the strong tailwinds are in financial services and in the loan platform business. So this whole tech company conversation, in my opinion, is an absolute red herring. It's often a reflection of the investors' disappointment of SoFi not becoming the story that they had first concocted in their mind when they first bought the stock back in 2021 or earlier. Focusing too much on that distracts us from what's actually exciting. Record member growth, rising fee-based revenue, improved GAAP profitability, increasing tangible book value, all of these are exciting parts of the SoFi growth story, and the tech platform is just one part of that story. It's not the whole story. So instead of debating whether SoFi is or is not a tech company, maybe the better question is SoFi executing on its vision? And is that vision worth investing in? For me, the answer is yes, but let me know what you think, where you fall on this 4-bucket framework. I'm curious to hear your thoughts, and let me know if you think I missed something. As always, thanks so much for watching, and I will see you in the next one.